So I'm here with Glenval Griffiths from Griffiths Insurance and Financial Services, and we're continuing on our series, Dream Building Finances. So I should say financial dream building, right? So we're doing finances and dream building. All right, Glenn, glad to have you here.
Fantastic to be back. Thank you.
Yes, and I just wanted to take just a brief moment to recognize those persons who have taken the time to subscribe to the channel. A big thank you. We're so grateful for your support and the comments that you have sent us. You know, some persons have chosen to send comments privately, and that's okay. We do appreciate any comments and feedback that you can send to us. And for those of you who have not subscribed as yet, I just want to take the time to encourage you. Go ahead and subscribe, because that's the only way you're going to get all the new updates and everything that's happening on the channel. All right. So Glenn, for today, we want to talk about financing. You know, there's been little buzz here and there about the topic of financing, especially now. You know, people want to know more about how do they do that. But before we delve into that, I would like to do a little getting to know question for you. Are you up for it?
I am.
Great. So I would like to know, Glenn, are you still excited today as you were when you just started your business?
We'll say it's different, sometimes more so. And the reason why is not only do I see possibilities, I now have experience. 20 years of doing this and the impact that I've had on the families that I've worked with, right? To know that you came into someone's life and helped affect the trajectory of the next few generations, and they themselves right now in a much better way. Awesome feeling, right? So it just excites me on the impact that I'll have on so many more going forward. And I'm excited to continue to get to work.
Absolutely. Yeah. Well, I'm glad you are. So now that we have gotten that out of the way, I guess we can get to the meat of the matter. All right. So I'm really curious to hear what you have to offer us today as it comes to financing. So go ahead, Glenn.
Okay. Well, thank you for that, Genese. So I am one of my titles is an authorized internet banking practitioner, right? And that is from the Nelson Nash Institute. This gentleman, Nelson Nash, came up with this process of internet banking. The bottom line is you hold on to your money as long as possible and you find ways to finance the things in life. Right now, people hear financing, and for some people, it's a dirty word, right? A lot of people say, hey, you might finance, but I don't finance things. Well, guess what? We finance everything we buy, no exceptions. What do I mean by that? Well, you're either going to use your money and by doing so, give up what it could have earned going forward for the rest of your life, or you're going to use someone else's money. Now, most of us are taught to not finance anything. Finance is just a bad, dirty word, right? And it's not a terrible way to go because it can give you some peace of mind because that can get out of hand quickly. However, what we have to realize is the wealthy has been doing that effectively for generations, because financing in a way that's advantageous to you helps get you further ahead. And I'm going to share my screen here shortly and just show a little program that I use to kind of shock my clients and get them to start, opening up to the possibility that what they've learned may not be the most accurate and efficient way to go. And like I asked the question, I'll ask you, Genese, if most of what you knew about financing and money was not true, would you want to find out now or 20 years from now, possibly?
Oh, definitely. I would like to know now all that I can know.
Great. And then that's the answer of the people I work with. Some people say, I don't care. You're not a fit for me, and that's okay. Right. But for those who I work with, you want to know now because you want to know how to be more efficient. Right.
Absolutely.
So here's the example I'm going to use. I'm going to share my screen shortly. I'm going to use the example of a vehicle because most people can identify with, I see this vehicle I want. Now, let's say my vehicle is going to be 50,000. I'm sorry, let me ask, can you see my screen right now?
I can
my shared screen?
Yes.
Fantastic. So my vehicle is going to be 50,000. I don't want to pay for it for more than 5 years. And I'm thinking, should I cash my money out that I'm making 5% consistently on, or should I get financing? Now, I get the thing a lot of times, nobody's making 5% consistently. Well, yes, you can, but that's another video. Keep in mind, infinite banking practitioner. You're going to hear that a lot more in the coming months and years, right? But let's continue with that. So I've got 50,000 again. Most people are saying, no, since you saved the money up, why would you go get financing? That's so much stress. This is going to get an even better story. So I walk up to the dealership and I go, hey, I would like that vehicle. What do you have for options? Because I want to know what my options are. And they say, well, we're offering a fantastic rate this day, and we can let you have that car for 7%. Now, most of you are going to go, you'd be an idiot to do that. You're getting money at 5% and you're going to borrow at 7%. Why would you do that? You're losing money. Am I? Let's look at it. In the top example, my money is compounded. What that means is every penny that I've got out of that 50,000 plus whatever the growth is over the next 5 years is gaining that 5%. So that's going to give me about $14,168 in interest over 5 years. The bottom is amortized interest. And even though the number and the percentage is bigger, because I'm making my payments, and in this case, the payments on the vehicle will be $990 a month if I want to knock it off in 5 years, then what I'm going to pay at 7% is $94.04. I'm gaining $14,168 and I'm paying $94.04. Does that make sense to our brains most of the time? It doesn't. But remember, this is on a declining balance each month that I'm paying that 7%. So over the 5 years, by leaving my money to do what it does and using someone else's money, I have gotten ahead by $4,700. Now, I'll let you guys know a little secret. This is probably not going to be my last vehicle that I get, right? I may have another 4 or 5 in me over my lifetime. Maybe more, maybe less. If I do this process each time, and that $4,700 I get to keep, plus that money keeps growing and compounds over the next 20, 25 years of my life, how much could I save by doing this? Now, I use 7% to really make an extreme case here. What if they said, you can get the financing at 5%? That just means I get to keep more of my money by using the financing. Think about that, right? Now, in this particular case, I'm not going to use their financing. I asked them because I wanted to find out what they would do. I can go somewhere and get money at 5%. How would I do that? Because of the infinite banking concept, what I've got behind it is money in a storage facility that I'm not going to interrupt, but I can get a guaranteed loan to go and purchase this. Now, I'm going to go a little bit further with this. When you finance a car, who owns it? Let's say in year 4, who owns it?
Guess the company, right?
It does, or the bank. So if you go 4.5 years and things get really, really rough and you can't pay for the next 2-3 months, what happens to that car generally?
Then they repossess it.
They're going to take that car back and all the payments you've made ahead of time. I'm going to throw a little wrinkle in there. If I had done this my way, okay, got the financing not from them, but from another place, another institution, and again, this is all very, very possible, but that's different videos. And I use that financing based on my storage facility that I get the option to go and buy this vehicle and not have set payments. I'm still going to make them because I want to make sure I put this money back. Who owns the vehicle from day one if I do that? If I get other financing, who owns the vehicle? Does the dealership own the vehicle or now do I own the vehicle?
Well, I guess it makes sense that you would now own the vehicle.
I own the vehicle, okay? So if I'm in a similar situation and for some reason I couldn't pay that for the last 3 months and I have an open-ended loan that doesn't have a set requirement, nobody's coming to come take that from me. That is mine to keep. That's a whole different tangent that we're not going to go down today, but I just want to show you how powerful this is in several different ways. So not only do I have more money based on the same number here, 5% and 5%, right? Because that makes a huge difference, amortizing interest versus compounding interest. But I'm going to have ownership of that asset and flexibility in how I make my payments back. So yes, I could pay back earlier, I could pay back later. Again, that could open up a whole can of worms that we're not going to go into today. but I just wanted to disturb you and show you that we finance everything we buy, and the way we think is not always the way things are, because the numbers are the numbers and they don't lie, right? So we have the option to do like the wealthy. The wealthy have been doing this for generations. Houses, cars, businesses for generations. And that is why they stay wealthy, because they have access to the information and they exercise this in the use of this information to keep themselves ahead of the curve by strategically using other people's money when it makes sense, right? But I'm going to stop it there, because as I said, today was to just disturb and get you to look at things at another way and say, maybe it's not as cut and dry as I've always thought it was, right? So that's what I wanted to show for today. That's a little bit of a taste for today, and we leave it at that. If you've got any questions, yourself, Genese, or anyone who's watching this, Genese will leave my contact information here as well.
Perfect. Well, thank you, Glenn. I don't know, have you been disturbed? I have been disturbed, I'm telling you. I mean, and this is a truly controversial topic. And as I say, I love the interaction. For those of you out there who are saying cash is king, I'd like to hear from you in the comments below, right? And for those of you, if this is new for you, I'd like to hear from you as well. But it's always good for people to know options, right? Because there are always different solutions for various problems, right? So let me hear your comment. And for today, that's all for now. I mean, this is our time for today, but I am glad you were troubled. Glenn, that was his aim. I think he's done it. And I'm sure we'll be getting lots of comments here today. Remember, just check in the description. There are a few resources for you and also a way in which you can contact Glenn. And don't leave without checking that description. And if you need to get more information, just feel free to contact us. And we will see you again in our next series as we continue financial dream building. Thanks so much for joining us today. Bye for
Thank
now.
you. See you soon.